Welcome, everybody. Thanks for taking time out of your busy schedule. Happy New Year. Happy 2022. My name is Tom Hutchens. I'm Executive Vice President of Production at Angel Oak Mortgage Solutions. And our special guest today is Manish Valecha. Welcome, Manish. Manish is the head of Client Solutions. When was the first Angel Oak non-QM securitization?
Yeah, so it was actually done in 2015. So the years have flown by, and fast forward to today, we've done about 28 securitizations now, over 10 billion in origination and securitizations. That's over 26,000 loans.
I came here in 2014 when we just had a couple people and just trying to get this whole non-QM thing going. It was pretty exciting last year in 2021 because you mentioned you guys have securitized over 10 billion and we hit the over $10 billion mark in origination. So just so everyone kind of understands, Mortgage Solutions, we're on the origination side. We have a wholesale and correspondent channels. And then Manish and Angel Oak Capital, they take our loans and they create an exit strategy, which in most cases is the securitization market. What did 2021 look like, Manish?
Yeah. I mean, look, it was a stellar year. I think overall for the market, 27 billion in securitization volume. So what does that really mean? What does that number mean? So it means significant year-over-year growth. There was about 18 billion or so done in 2020, which was obviously impacted by COVID. But what we've really seen and gets us really excited at Angel Oak is behind those numbers are actually investors. And we're talking about pensions, global investors, insurance companies, money managers that manage capital on behalf of different investors, around the world, institutional and retail. And we saw that investor base grow significantly and really sort of continue to validate the asset class post the COVID situation in 2020. So I think that was what was sort of very significant for us from a 2021 perspective, was just the continued growth on the heels of what was happening kind of globally around the world with COVID. And really, if you think about non-QM, non-agency, it's really a product, an area that investors look to provide yield, to provide income, to provide exposure to the U.S. housing market outside of what the agencies are doing. And just to see that growth take place in 2021 on the back of 2020 was a pretty successful year from that perspective.
Well, what's pretty awesome about it, because you're kind of like with the investors on the back end through securitizations, and we're seeing the same thing on the origination side. We saw lots of growth in number of originators doing business with us. We set a record for the most volume. We were just right around 4 billion in non-QM originations last year. So it was a great year for us to grow together. You said the first securitization was 2015, but a lot of that has to do with what? The quality of the loans themselves. Isn't that a pretty huge factor to keep investors and more investors getting more and more interested every year?
Yeah, I mean, I think, from an investor perspective, what they really want to look at, Tom, is they really want to think about relative value of non-QM as an asset class versus other asset classes. And they factor in a few different things there. One, they factor in, what sort of delinquency, default, credit expectation they should have for the asset class. And, one of the questions that we historically always used to get, and this, Tom, is just, hey, what sort of performance can we expect through a global financial crisis to 2008 to really sort of a stress test, and we have that answer coming out of the COVID time period. And so when investors sort of calibrate and think about the different relative value, different asset classes that they could invest in, whether it's corporate credit, non-QM, or different asset-backed securities across different sectors, non-QM stands out just given the performance we've had.
when we started this, and even the term non-QM was new to the market, and some people were saying, "Oh, here we go. This is just subprime 2.0." And what we said then, and what we continue to say today is that that's not it at all, because we really for this model to work, what's different between kind of the post-financial crisis and pre is that we're all under one roof. So the performance of these assets, the performance of these loans is critical to our origination. Whereas pre-financial crisis, there weren't a lot of relationships between originators and securitizers, but here at Angel Oak, that's completely different.
The fact that we are 100% aligned, that it says Angel Oak on both of our business cards, I think means a heck of a lot to the institutional investor base that invests in non-agency loans. And the pensions around the world, the insurance companies and so forth, they take comfort in the fact that we are one integrated platform, that there's a feedback loop between them and the originator, and then from your perspective, obviously that provides certainty of execution, which is absolutely critical.
When we give an approval on a loan, we know we're closing, we meet those conditions, we're closing that loan. We don't need investor approval or product approval. We've worked extensely over the years, but we do on a regular basis of fine-tuning the guidelines. When we started this, I think 30+% of our originations had an exception. Well, we've seen that number just come down a lot, and the reason is that we found ourselves, if we were making the same kinds of exceptions and we liked the loans and investors liked the loans, we would change the guidelines, and then it's no longer an exception. But even so, we've always had that authority to make exceptions on good loans. So surety of execution, when even it starts, you talked about on the ground floor in the trenches, when one of our account executives tells a loan officer we can close a loan, we can close that loan. What do you think about 2022? I'll just, we're looking at probably $7+ billion in non-QM originations just from us. What are you seeing kind of market-wise, securitization and things like that?
Yeah, I mean, first and foremost, I think the product has been through a stress test. It's been validated through what was, arguably a pretty traumatic event from a capital markets investment perspective. And you saw the credit performance, you saw delinquencies continue to trickle down, and people just have sort of gravitated to the asset class from that perspective. So we sort of see a continued growth in 2022. I mean, if you think about industry forecasts, people are forecasting a $40 billion year from an issuance perspective, which would be the largest year since inception of the asset class. And so we continue to see that growth. We plan on in our partnership with the mortgage side here, we plan on being an even more frequent issuer of securitizations than we were last year. We did 8 deals last year. I think you're going to see us exceed that number this year. So I think it's shaping up to be a pretty active growth story this year. And I think the reality of it, Tom, is we're still in a low yield, low income environment, and the investor base just continues to gravitate to the asset class.
We start thinking about agency rates, and we're seeing the Fed continue to raise rates. I don't think there's any doubt there's more rate increases coming, and on the agency side, that brings margin compression, so it becomes challenging for lenders. There's less loans out there, and then you have to compete even more to get those loans. So rate increases, margin compression are real, which is probably why a lot of people are on this call with us today, and I think that's going to continue throughout 22 and beyond. A lot of people have asked me, and I'd love to hear your perspective, Manish, but the market, we've always talked about being a 200 to 300 billion annual securitization level. And, you're talking about this year, maybe 40. I actually think it's going to be maybe a little higher than that just because of what's happening on the agency side. But what do you see when people ask you about that, as far as size of this whole market?
Yeah, I mean, I think generally, and the investors have bought into this, by the way, from an investor perspective, whether you're a pension or your money manager, you don't want to be investing in an orphaned asset, right? You want to be investing in an asset that you can grow with, that you can continue to allocate capital to as your investment program sort of evolves. So I think investors sort of, gravitated to this idea that, if the non-QM market is 40 billion, that it needs to get to some sort of normalized level, which was historically where the non-agency market was, pre global financial crisis. Maybe if you look at, the 2002 time period, which we've talked about, as being a 250 to 300 billion dollar market. And they've also bought into this idea that right now the agencies are continuing to evolve and continuing to step back from areas of the mortgage market. And so, this creates a larger opportunity set for the investor base.
This is going to be a big year. 23 is probably going to be an even bigger year. But we talk about on our side that there's more investor demand than there are originations right now. So we have been from day one always talking about how to scale this business, how to make it easier for originators to originate these loans. We've got a lot of big plans on the technology side. Lenders need to form relationships with non-agency outlets, and that's really why we've been in the space for as long as we have been, because we've always believed there always is a need for outside of the agency lending. Whatever that looks like, but now it looks like the non-agency piece is probably that market, it's gonna grow organically, but when you tack on industry or policy, government policies changes, that's going to even really emphasize that. So anybody who's not getting ready for that needs to, because I think there's more coming down the pipe. Any originators out there that want to find us, go to Angel Oak MS, as in Mortgage Solutions, angeloakms.com, and there's a Find Your AE. Just click on the map and somebody will get back to you quickly. We're just excited about what 2022 and beyond holds. Manish, always a pleasure. Thanks very much for your time. Thank you to everybody else for joining us, and have a great 2022.